Hi guys, thanks for tuning in to another episode of Nuggets News. Well, I feel like this has been the biggest week of all time in terms of news and everything that is going on around the world. So I'm going to do my best to whip through all the macro news and the crypto news as quick as I can for you. And if you do want more detail, I do expand daily on what is going on and my thoughts in our group. But I do want to start off by welcoming a few hundred new subscribers again this week. Thanks to everyone that joined our 3-year anniversary live stream on Friday night. That was a bit of fun and we covered a wide range of topics. Bit of housekeeping: if you do want a free CoinJar swipe card, I did a tutorial for them the other day and there's an offer if you just watch that video and download the app. And some interesting feedback about the Robert Kiyosaki interview if you guys check that one out as well. Just a reminder that we're continuing to pump out all this free content and resources over on our website, nuggetsnews.com.au. So it's tax time coming up in Australia. We've got a discount offer there for you, as well as a heap of other discounts with all our partners over on the website there. And it has been another record May. So Ben puts out a bit of a report each month with everything that's going on behind the scenes. We are again expanding staff-wise, so keep an eye on our socials for that. And a record month with 355 new signups for our premium services and 70,000 visits for our free education over on the website. So that's unique visits, and I think that's a bit of a glimpse into how many people are getting into crypto. That's fantastic to see. And thanks to all our partners and the deals they offer. We are still offering the $100 Bitcoin for those of you that are interested in trading shares and signing up there. Now, I'm going to talk about a lot of these free trading apps and the positives and negatives with them, but the eToro have just added feeless trading on a lot of the US shares, which I know everyone is really interested in. But for the majority of people, I'll say it time and time again, if you're a beginner, this should be long term. You shouldn't be day trading. You should be using leverage. They're the risky things where people get into trouble, and where we've started to see that in the US market this week. We'll dive into all those stats as well. But let's start off with the local news. So this one fell under the radar a little bit because of all the other news going on in Australia. But look, Westpac looked like they could have been breaching the law 20 times more than first thought. And that original claim was around 20 million. So possibly 400 million breaches. We won't go into the details there. We don't want to upset the YouTube algorithm, but it was pretty bad stuff. About as bad as it gets. And once again, the Aussie banks are in the spotlight. Winding back JobKeeper. Now, this isn't just an Australian problem. Governments around the world are looking to start to gradually peel back the support. And just like the Federal Reserve are going to find it hard to peel back all that money printing and support for the stock market. Governments, I think, are going to find it a real political challenge as well as an economic challenge to pull back that support. So we saw things like the free childcare. Now, I know we can't support everyone forever, but I'm just saying these are the sort of things that are going to be in the headlines in Australia over the next few weeks. Zombie firms, thousands of them. Now, we've heard about this cliff that's happening in September, and I don't think that they're just going to let everyone fall off a cliff. So the RBA, the central banks, are going to have to come and help out to some degree, but they're asking governments to continue to spend more, but governments don't want to go into debt. So this is the butting of heads that I've been talking about for probably over a year now, and it's really starting to come to a head. Now, the relationship with China, some people say that this has been blown out of proportion by the media, others saying that this is a really big deal. So we had a heap of Chinese investors in our property markets. Then they've started to tariff some exports. Now it's threatening to not send their students here for education, and particularly universities are going to get hit really hard by that. We're so reliant on China, 93rd in economic complexity. That stat continues to surprise people. Australia's actually not good at that much. So if that relationship with China really changes, I think with everyone going into recession, it has the potential to put us into a depression unless we pivot and start to concentrate on updating our economy. Now, this one's just out in the past couple of days as well. Chinese investment into Australia is at 10-year lows. So a lot of people are worried that there's too much going on. Then we get a stat like this. So I guess it's all, down those granular basis of where that investment is going. But we've seen a lot of countries, like even the US, just has so much investment in Australia, and we tend to sell off a lot of our assets, abundant resources, but we tend to pay the most for them, which probably, it does tell me that we're just really inefficient at a lot of things. We just could be doing better in creating jobs to do that. So cash flow crunch for investors. A lot of people with the Airbnbs are failing to rent those out. We're seeing rents come down a little bit. We're hearing stories that the property market's bounced back really quickly. So I'm looking forward to watching this data as it continues to come in about the forced sellers and these stimulus packages going to prop up the market and cause a new wave of buying, which we're sort of hearing that from the builders. It's all, I guess, propping it up and borrowing demand from the future. But I think longer term, these things, eventually, someone has to pay the price for this. It's not just pulling demand forward and handing out money without these side effects and consequences. So yeah, the housing boom propelled inequality in Australia, but the bust will skyrocket. So what this is kind of saying here is that the negative gearing and the benefits and the bailouts and the stimulus the government gets, it all ends up benefiting those that have the assets. And if you think about what house price falls actually do, it makes it more affordable for all the people that can't afford a house. And that is the thing that the government are stopping doing, kind of protecting people that have invested a lot because of how reliant our banks are and the whole economy, that intertwined structure. And there's no right answer because of how big it has become, all the way through to our super funds. This chart really shows it well. So I do like the tweets by Avid Commentator. Give him a follow. But this is just that real household dispendable income, and it grew pretty sharply for Australians in 90s all through the noughties there, 20 years, and then it's just gone flat. And the average household just hasn't had any increase in their average wages, but all those assets have been going up. So that tells you right there that the rich have been getting richer. Now, Scott Morrison has come out and said that he wants to get these international students back from July. Of course, he wants that. I've just outlined all those reasons why, but he's saying that Australia-China relationship is not injured. So he's talking up that everything's fine. We'll wait and see what those numbers are like and how badly, I guess, the Chinese, how they think about Australia and some of the headlines, whether that's all just, for the clicks or if we do see a meaningful drop in those numbers. Now, China have dropped these debt payments for 77 developing countries. So they've lent out a lot of money. I've covered this in previous episodes, giving these, I guess, relief packages to countries that they've lent to. So it's not just Australia with that close relationship. You got to remember, China's got the biggest or second biggest economy, depending on what metric you're looking at, compared to the US. And they consume a lot of all the world, particularly those developing nations' resources. Another thing I touched on was this medicine reliance, particularly the pharmaceuticals and antidepressants like Zoloft. We're now seeing shortages of those because of strikes, and a third of Americans are showing signs of clinical depression, but I think the stat is 1 in 2 take something for mental health, whether that's antidepressants, antipsychotics, sleeping pills, pain tablets, anything that's active in the brain, and that is the largest percentage of citizens that take that sort of medication by a long way. So big pharma is really ingrained over in the US. These are the mobility trends. This is a website we've been keeping an eye on from Apple, and that shows us that driving and foot traffic has ticked back up sharply above baseline, but it's transit. So people that aren't actually going back to work yet. Maybe this theme that we've been talking about, less people going to the cities, more people working from home. But Texas has reported a record number of hospitalized coronavirus patients shortly after reopening. So this is the fine line that we are really treading here, because there's no doubt that COVID has already had the biggest impact. A lot of these insurers are being smashed by this, bigger than Hurricane Katrina in the US. They've got to foot the bill. That is going to hurt their profits. But more importantly, these are the states and the weekly reported cases. A lot of states never really plateaued. They're still on the up and up. So it's a bit like when we talk about the property market. It's a case-by-case situation. If we have a look at the uniform scale, put things in perspective, we can see New York is obviously a lot worse than many of these others. But if you haven't slowed it down and you're reopening, that is where I just think things can get nasty very quickly. So we hope that that doesn't happen, but there's a lot of stories that are going to be covering now about this second wave as cases top 2 million in the US. Now, for the first time ever, we've seen US core CPI. This is the month-on-month inflation, the way that they measure it. decline for 3 consecutive times. So this is the risk of deflation that central banks are fearing. They don't want that economy shrinking in size and the price of things going down. And one of the reasons that can happen is everyone trying to pay down all this enormous debt and just less money in the system. So yes, the US economy did bounce back and people were calling the bottom, but yeah, I'm not sure if you can see that just behind me there. It has rolled back over again. So whether or not, if we're putting our trader's hat on, this is going to form a bit of a high low and trend up, or if this is just that bounce and we continue to roll over. So despite that deflationary stat that we just spoke about, in the past 3 months, that money supply has increased at an 82% annual rate. So the amount of money, that is just dwarfing anything that happened back in the GFC. But what is a little bit worrying here is that the Fed have only printed, only $120 billion in the past month. So they've slowed that down. But the government has borrowed $700 billion in May alone. And now we've got the government that is sitting on this huge pile of cash, $700 billion. And people are saying, well, are they going to spend that in the next 3 weeks? We're already hearing, we'll get to another slide in a second about the $1 trillion that got thrown around the day that the stock market fell. But this is the scary stat right here. So the biggest monthly increase since 1974 in terms of meat, poultry, fish, and a lot of these other, foods and alcohols, people that are spending their money on, particularly low wage income earners. 2.6% in just April. So that is what is really scary if you're in control at the moment, whether you're a politician or a central banker. Food and goods going up, but deflation in the overall economy. That is not what you want, and that's very hard to fight once that gets started. So in late April, 17% of mothers reported that their children under 12 were not able to get enough to eat because the family couldn't afford food. That's a 400% increase to the last time that this was measured 2 years ago. So again, America, we think of it as this huge number 1, number 2 economy in the world, but if we forget, there's a lot of people out there that still can't afford food and housing, a lot of people on all those government programs. Now, Jeffrey Gundlach has come out and warned that rising rates may lead to the Fed doing this yield curve control. So rather than saying they're going to buy a certain amount each month, they're just going to try and pin rates low, particularly if inflation happens. They've got no choice but to really fight that. And this is why Treasury Secretary Mnuchin, he's desperate for things to get back to normal because of all these little cracks that are starting to appear. So he's saying that we can't afford to shut the economy down again. Now, I know all the doctors in the audience are cringing when they hear things like, we can't afford to do something because of the economy. Then that's where I guess the debate is that everyone's got a very strong opinion on what's worse, economic shutdown or a lot of these people jobless. Now, I cannot believe that this next story is actually unfolding, but in Seattle, if you're anywhere nearby or you're in America, let me know what you think of all this. We've got this 6 blocks that's cornered off. It's heavily armed. We've got a warlord in charge now, crime spiking. I heard another story that, was it Minnesota? They want to dissolve the police. So, I really want to hear from you guys, and I know we've got plenty of US subscribers about what is this like? 2020 continues to get stranger and stranger. We've got Tesla employees testing positive for COVID just days after that company, really fought to reopen. Hopefully these aren't serious cases and healthy individuals can fight this off. But it is worrying when we hear these numbers about the number of workers, 4.5, that are now looking for every one job that is available. So those job openings have, really fallen off a cliff there. Treasury deficits, the government have spent big. That really makes everything else pale in comparison there in terms of that deficit that they are going to be running, heading up towards $2 trillion. 100,000 small businesses may have permanently closed due to COVID, the latest study finds. So that's 2% of all American businesses gone for good. This one's upset a lot of people. Steven Mnuchin, Treasury Secretary, refusing to disclose the businesses that received that $500 billion. So these are all the bailouts and saying it's confidential. So 4.5 million businesses receive these government funds, but there's no transparency. This is the taxpayer dollars. And this is where I think the civil unrest, it's stemming away from the initial event into all these other parts where people just feel that they've been done wrong by. So jaw-dropping Absolutely, I definitely agree with that. We've also seen a lot of these CEOs that have had to cut back their salaries. Now, this study showed that all those CEOs that have been cutting back their salaries the most, 52% of them actually got more options and shares and other things. So while you're losing your job and they're cutting down staff numbers, they're saying, look, I'm taking a pay cut too, but under the table, sure enough, getting all those stock and options. Then they'll probably issue more debt to buy back more shares, to push up the price of the shares and the options. And again, they just completely make so much more money than that guy that's just sitting there at home and has lost his job. So this is another thing I mentioned about China not being able to make good on the trade deal, and this is the first data that's starting to come in here. We can see these yellow dots, the realizations well below the targets that have been set for 2020 and 2021, particularly with those agricultural goods. I just don't think that China are going to be able to buy what they promised. So the Fed, seeing all this unfold, the Fed have been on the front foot and promising that they're going to expand the Main Street program and help small businesses get bigger loans if they need, smaller loans, whatever it is. But I just don't think the appetite's there from those businesses to go into more debt. And if people get those handouts, again, that's where we get a step closer to inflation. So borrowing costs for investment grade companies have fallen within 1 basis point. So in terms of people that are issuing debt at the moment, you might not be able to see that, but it's dropped right back down to 2.23%. This is all the big corporates that are issuing junk bonds and junk debt. And look at that spike up to 4.5% when everyone was fearful about lending bad companies money because it's risky. Whereas now, because of the Fed, it's never been easier for a bad company to get more money. And that is just nuts to think about. So yeah, corporate debt doesn't surprise anyone that it is at all-time highs. And even in terms of percent of GDP, 50% of GDP now is that corporate debt that these companies have been issuing. Now, the share of zombie companies, these are the ones that can't actually service that debt and pay it back unless they increase their profits. And this has ticked up from basically near zero back in the year 2000. You didn't have too many companies that if they didn't make money, they weren't there. Whereas now, 20% of companies aren't making money and can't service all the debt that they've issued. So there's a big wave of defaults that's coming. And if they just had to let it happen in 2008, look how much smaller it would have been. All these people would have found a new job or had to get retrained. But now, can you imagine if we let all those go at once? 20% of all these firms going bust, that would just be catastrophic. And that's why I am worried about what lies ahead. And at the moment, there's nothing the Fed can do but kick the can down the road and try and rely on other people like asking government now to figure something out for them. So bankruptcies are at 2008, 2009 GFC levels. No surprises there. The ECB over in Europe, they're preparing a bad bank. So you bundle up all those bad loans and you create a new bank called a bad bank, and you just basically let it default, nationalize it. Taxpayers end up paying for that indirectly. The banks get away with it scot-free because now they know that they can just buy the riskiest investments. And if some of them turn bad, they just handball that over to the old bad bank, the too hard basket. This is insane. And if more people understood this, which is why I'm so passionate about these videos, and I'm going to be doing some whiteboard on these specific issues. If more people understood this, there would be more civil unrest overnight. So the question now becomes whether or not the Fed can rescue everyone without crashing the dollar. So we've got the milkshake theory, or my digital thick shake theory, that stablecoins are going to become more widely used than current banks and payment systems. But the other side of this argument, which I certainly think is a possibility, is that the Fed prints so much money that the dollar is going to crash, because sooner or later people have to say, well, how are they ever going to pay back that couple of $1 trillion? Now, the counter argument is, well, Europe's just as stuffed, or Australia. All these other countries are going to have to print just as much, if not more, money than the US, who are the world reserve currency. So that's where you get the cleanest dirty shirt in the laundry argument. And I've got an article coming out this week that really outlines more detail about my thoughts on some of this. All right, so total US debt, it's increased by, I think we're even more than that as the stats that we just looked at. But, in terms of the year, sorry, this is just 1 month. Wow, $1 trillion in just 1 month, US total debt. I take that back. Scott Maynard looking to gold with the US dollar losing its market share. A lot of whether it's central banks or governments. Excuse Henry barking in the background there, guys. A lot of central banks we've seen adding more gold, so 32 tons of gold in reserves just in April. Turkey leading the way. Whether it's investors or central banks or some of the government reserves, gold is just looking more and more attractive as those US interest rates, they're ticking closer and closer towards zero, and I think they're going negative as futures are pricing that in. The Fed is saying it's never going to happen, but the market is smarter than the Fed. The Fed have been wrong at every turn. The market is always right. That smart money, that bond money that I talk about. So people have been asking about the gold indexes. Now, Michael, who does our gold and silver reports for our premium members, he's done a video, and I'll share that in our members group later for you guys as well, about the rebalancing that's happening, because some of these, even Australian companies, are now getting weighted in the GDX and the GDXJ, the gold ETFs over on the big US markets. And I think that's going to be a real boost for them individually if you know how to trade that. But more so, as I said before, if we've got zero fees and you can hold these things and you want gold exposure long term, that is one way that I use these products to our advantage, because it's way cheaper than trying to do this through an Australian broker and paying $5, $10, $20 a trade. So yeah, that's all available over on eToro. Now, percent of IPOs with negative earnings. This gets back to not only companies issuing debt, but companies that are going public. So look at the number of them that have negative earnings. They're zombies as they're raising money and just getting started. So nearly all these companies up towards 80, 90%, negative earnings, losing money at the time when they're going public and raising money from investors because of how easy it is. And we're reading these stories and hearing on the grapevine companies that are trying to get this done as fast as possible because they're getting tapped on the shoulder from their mates that get the kickbacks from the banks. Raise money, go public now. VC-backed car site Vroom calls top IPO goal to raise $470 million because, do it now while there's so much money out there. The Fed's pumping the markets, guys. Go public, raise stupid amounts of money. Don't worry about the fact you're losing. But that is the way the world is at the moment. Now, probably the height of the craziness here is Hertz. Most of you now know that is a company that announced they're bankrupt, they're in liquidation, but it's one of the most traded on Robinhood, where we've got these free US trading apps, and I think they have the list of shares that have fallen the most, and these retail investors are just flocking to whatever's down the most, thinking it's going to bounce back the most because stocks only ever go up. But they want to now raise $1 billion. So they're going to hand that money to creditors. So they're going through liquidation to see whatever's left to give the scraps to the creditors. And again, shareholders aren't at the top of that pecking order. But they're doing that by selling shares to gullible new traders and investors. I mean, this makes no sense whatsoever. But how do they get away with this? I do have a whistleblower coming on the channel soon who's talking all about the ratings agencies, and that one is going to be a fantastic interview. Now, outside of the tech companies, US companies are now issuing more stock than they buy. So remember how it used to be all about buybacks and trying to pump your price? Well, now it's all about trying to get more money off other people. So issuing more stock and diluting, the supply, the holders of shares currently, just like adding more and more coins to a small cryptocurrency, those of you that are from the crypto space. Another crazy occurrence here is a company in China called Fang DD, and because it has a name similar to the Fang stocks, I'm not sure if this is algorithms or lost in translation, but this company was up 400%. Mystery move. It's a real estate firm. We're going to look back on all this and really laugh. Tesla, I haven't really kept an eye on this one since it had that initial run and we got near 1,000 and we shorted that one. That was a trade that I was talking a lot about at the time. And here we are back over $1,000 when they've been out of action. Hearing stories about those Tesla solar roofs having a lot of issues. A number of other car companies are getting into the battery space, but anyway, it's back over $1,000. So with all this happening, and the Fed have caused all this in my mind, and the Fed are now warning of significant financial sector vulnerabilities. Well, thanks for warning us, guys, but you are the cause here as well. And the Fed needs better answers than just this running away in the inequality markets. sure, or backstop the liquidity if you want to stop that hard crash, but there needs to be some serious hard conversations about what is going on here in the medium to long term, because you are leaving behind even not just the lower, that middle class, and that the corporates are kind of laughing here at everything that is happening. So Powell said, the Fed will never hold back support for the economy, even if asset prices are too high. Now, that is a very powerful statement from a guy who said he never used to look at stock markets or take notice of them. And he's saying that we're going to keep supporting the economy. But the problem here is that for every dollar that helps the economy, it's something like $2, $3, $5 goes into these asset prices. So that's why they're printing all this money, but the rich are just getting richer over here. And he's basically saying, well, we're going to keep doing that because we're going to keep supporting the economy. Maybe stocks just keep charging higher into the biggest bubble of all time. We haven't seen anything yet. So have you not learnt your lesson? Don't ignore the Fed's gusher. Interesting article over on Bloomberg from John Authors here, basically saying that, the Fed are just pumping the market with this liquidity. It's the fastest recovery in tandem. It's no coincidence. It's the fastest expansion of money since the records began. Now, the Fed are talking about cutting it back now to 80 billion in treasuries a month and 40 billion of mortgage-backed securities. So 120 billion a month, that's still way more than at the height of QE after the GFC. And I think they are going to have to step that up way more, or we're going to see government spending step up. Another $1 trillion is coming, in my opinion. So you can just see how steep that recovery is compared to back in 1929. Look, I have been fully surprised by this. Weekly financial flows, another record here. That money is just pouring into markets. We see Google trends for things like day trading and call options at record highs. And that's not good. I mean, I've done these videos and I've constantly emphasized, if you don't understand something, don't trade it. If you're a beginner, you shouldn't be day trading. You shouldn't be using margin, leverage. You shouldn't be trading options. You should definitely not be selling options because of how dangerous they are. And I've done plenty of education and tutorials on all of that. So when you look at the ratio of puts to calls, we can see that's down at 5-year lows. So people are only interested in buying things that are going up, and they're not interested in buying that protection for the downside. We've got the number of companies in the S&P 500 in overbought territory is now the most overbought ever. These things are just red flags like I was waving the day before we had that huge crash back in February, and it feels like that again. So Druckenmiller's on the sidelines. He was too cautious. Look, I know I'm still cautious and got US dollars on the sidelines. I'm happy with gold and being more defensive than more allocated. And I know people are laughing, the retail investors that are laughing at us like these Barstool, day trader Dave or whatever he calls himself, and the millions and millions of these followers and people that are just going into all these trading apps, buying anything, thinking they're going to get rich. It's really scary stuff, and you can see that that's basically a parabola there, isn't it? It's just gone vertical, the number of retail traders and online brokers activity, particularly when you're handing out these checks and people are bored at home. So once bitten, not shy, and investors are again seeking these margin loans as stocks rally. All these new investors, you should not be borrowing money. And remember before the crash in Australia, how I tweeted out that email from one of the big four banks, and they were offering loans. They want people to borrow $20,000, $30,000 to buy shares on margin. Now, those emails aren't going around now there's been a crash, but that's the sort of things that are at play here. And people get wiped out. So we can see that these few thousand retail day traders on Robinhood are moving the market, and it's not necessarily them, but it's these high frequency trading, these algorithms. And I did a dedicated video about all this. So a lot of these are sort of front run, and we can see that the Robinhood are selling this third party data to some of these other companies. And I'm not sure if this is illegal or not, but they're listed on New York Stock Exchange. And there's no doubt to me that they're using these market orders. So are they seeing all these app orders come in and they're front running these trades and then selling them to retail investors? I think that's probably not the last we're going to hear if that is the case. And Jim Cramer said that here as well, looking to buy even in the morning before they open in the pre-market trading, that the big boys again, they get to buy shares before everyone else, and then they flip it and just sell it to Robin Hood types once the market opens. And it's an easy game, isn't it? So putting all that together, we finally saw the market have a bit of a pullback, and it was a nasty sharp one, 7%. Whether or not that continues on Monday, is the Fed going to pump in more liquidity? Are we going to see a nasty Monday crash as we have done in the past after some Friday sell-offs? But everyone's, I guess, an expert in hindsight, and frothy trading and bankrupt companies, penny stocks, all those red flags. The pullback was due, as CNBC finally say there. And if we have a look at what it looks like on the charts, it definitely just kept meandering higher than some of these fibs that I was expecting it to get stuck at or chop around at. And I did a post up for members earlier the week about this, these lesser known fib levels. But look, I don't think you need to worry about this too much, other than to know that we're finally rolling over. And the amount of money out there, I would not be surprised if we've just come back and tested this golden ratio, this fib zone, before heading higher again. But look, I'm really not liking trading these markets at the moment, because it's basically all technical based. It's not too many fundamentals that are making a difference at the moment. So look, when we had that crash, Secretary Mnuchin comes out and saying that they're going to pump another $1 trillion into the economy this month. So maybe it's from that $700 billion the government's got cash on hand at the moment. But I want to just mention quickly an interview I've got coming this week. A lot of these companies that no longer pay dividends. This is a book, and we'll get the author on. We're going to be talking about, well, where does this growth and value come from if a company never actually pays out its dividends and people are gambling on maybe making profits and maybe paying dividends in future. But really interesting thought process if you've never thought about it that way before. This is Wall Street's advice to clients. Take advantage of these retail investors and their relative inexperience. Look, that's all well and good if you're only here to make money, but this was a tweet which, it's just so upsetting to hear these things. I know people who have also gone through similar things, lost everything, and this is a retail investor who didn't know what they were doing, had one of the free trading apps. Looks like that they might have been selling options. Again, as I said, never do that if you're a beginner. Fast forward a week and you open your account and you're down $700,000 as a 20-year-old who's just downloaded an investing app because it had free trading. So they shouldn't be allowing that sort of exposure to even be possible. But he took his own life, and that is just an absolute tragedy. And I think we're going to see some changes in those types of things. There's no way you should be letting 20-year-olds with no experience get that sort of exposure and get that much in debt. So you've got to close those trades before they get to that point. All right, so if you do want to look after all your own wealth and you are a more advanced trader, we do have that partnership with New Brighton Capital. They've got that free consult for you guys. Again, you need that experience, as we've been talking about, to do those self-managed super funds. You've got to follow all those rules. We've got Adrian on talking about the tax recently as well and how that all works. I know there's been a lot of interest in that, guys, but look, please be careful and take advantage of that free consultation to find out if it is for you. And we are really thankful for our partners over at New Brighton Capital. Let's get into the crypto news, where JP Morgan continues their backflip and says that Bitcoin has sort of survived that big market crash, and it's really shown that it has staying power. So think about that change over the years from calling it a fraud and all that to banking the Coinbases of the world last week or two, and now they're saying that Bitcoin has staying power. So maybe these banks are needing these crypto companies to get some new customers, who knows. But it's all part of this, I guess, more warm attitude from the US, where they're weighing up this digital dollars. This is what I've been talking about, how much quicker it would be to get everyone to download a crypto app and just send them digital dollars for these stimulus payments. The Pentagon have revealed that they've got this plan for a Bitcoin rebellion. So they're saying that Generation Z are likely to rebel against the system and the establishment and use Bitcoin. Now, this is something that I spoke about in my 2020 predictions for the year, that, false flags and these attacks on Bitcoin, they're going to become a lot more common as Bitcoin becomes more mainstream. There's already plenty of ways that you can spend your Bitcoin already. So in Australia, we've got a number of these card providers. We've got Living Room of Satoshi, and that's kind of catching on in more countries around the world now. But even just these vending machines now. This was a little company, CentraPay, where you can now buy your Coca-Cola with your app. A number of places around Australia and New Zealand, I think, as well. So this is just good for that retail exposure and getting crypto under the noses of as many people as possible. Over to Saudi Arabia. After a quick drink, I can't believe how long these videos have been going, guys. I'm charging through it. So let's keep going here. Saudi Arabia deploying a blockchain network for their money transfers with local banks. South Korea developing a Bitcoin crypto exchange, one of their banks as well. So all this experimentation that is happening in the space, regulators are just trying to make sure they've got everything under control. And it's these kind of stories, a little bit misleading, the titles. So police seizing the funds of these crypto traders, but it was actually because the funds were involved with scams and illicit activities. It wasn't so much that they were crypto traders. So that's maybe the 10th time that China's banned crypto, I think, from some of the websites. Chinese state media taking aim at Binance again. It's pretty clear that Huobi are in the good books of the Chinese government and Binance aren't when we continue to see these articles. Quadriga X, it looks like they were running a bit of a Ponzi scheme the entire time, so I do feel a bit sorry for anyone that had crypto on that exchange and lost out. India are the new China. Every month they seem to ban Bitcoin and then unban it, but it looks like they're considering another ban, but whether or not that gets passed is another thing altogether. But just as crypto has really caught on there as well, that'd be a shame. 500 Estonian companies have lost their permits because of another big scandal. So again, we need to make sure that we have these rules in place because this sort of thing hurts crypto businesses and gives crypto a bad name. European banks are trialing stablecoins instead of SWIFT for cross-border payments. So this is literally that digital thick shake system I keep talking about in action. The majority of these stablecoins, 10 billion market cap, 90% of those are on Ethereum ERC20 tokens that we now have the banks playing around with. We've also got obviously Ripple in that space. Coil is the micro payments tip service there, and Hackanoon have partnered up with Coil. Pretty cool there, a little $1 million investment. A gaming giant, Atari, the latest gamer that look like they're going to be using their own Atari token for sports betting, gaming, and shopping. We've got Russia's Supreme Court making a landmark vote using a blockchain system. So look, I do still think that blockchain voting is something that is going to catch on longer term. In terms of the different smart contract platforms, this was a great report from the guys over at Outlier Ventures. Obviously, Ethereum is the dominant player here in terms of the number of dApps and users and smart contracts, and EOS in second position there. We've actually seen, though, that EOS has had the biggest percentage change in developers leave in the past year. So they're estimating that 85% of developers have left. And then you've got, obviously, Bitcoin Cash, Tron, even Cardano there. A few surprises, but that's pretty interesting for me. For a company that raised, $4 billion, Block One, maybe this is why they're looking to launch their social media platform ahead of schedule. But I have reached out to my friends that are EOS developers to ask them, what is going on? Is it true? Are people exiting, or is it just a migration consolidation of developers onto certain projects and that type of thing? Tron is another one that I think is all smoke and mirrors. This is another example. Justin Sun paying $500,000 for FOMO 3D to migrate to Tron. So you're paying companies $500,000 to come over to your blockchain. Tron 4.0 is out apparently with some advanced privacy features. So as soon as Ethereum and other chains implement these things, Tron basically copies them. Some more cool research here from our friends over at Sentiment. Check out their website, guys. They have been all over it, helping us stay in front of the changes in social media trends, and it helps you use that technical analysis and fundamental analysis to get some real big winners. So once again, top 10 altcoin keywords have been increasing. We've certainly noticed that. I was just going to mention that a lot of you are enjoying playing those indexes if you don't want to do the specific coin picks. Even the shitcoin index, which is a basket of about 30 different coins. That was one of the best performers in recent weeks, as we saw a lot of money just go into small, medium alts in general. And I know a lot of people have just been holding this index, longer term, building those positions as well. Filecoin, one that I really like the concept of. They're finally launching their final phase of the testing of their network. So that's like a sort of decentralized file storage competing with the Amazon Web Services of the world. Balancer Labs, their growth of tokens, steroids for DeFi. It's just all the these different Lego pieces and these balances where you can put different proportions of tokens coming together. I just love what is happening behind the scenes here. We continue to talk about these in more detail in our reports and different videos, particularly our monthly update with our friend Anthony. But the May edition of our 5FA is out. If you're new, guys, I will show you where these are at the end of the program. But we've just had some unbelievable coins that we've covered that have gone on for huge returns. So DeFi, the market cap has doubled to $2 billion in just under 2 months. And this is where these huge gains are coming from. So some of these tokens are now generating 5 times greater returns than, remember, last year, the year before, when it was the exchange tokens that were the best performers. And now we're seeing things like Kyber, Chainlink. Again, these two teaming up for more reference data, which is fantastic to see. MakerDAO up 30% after they voted to use real world tokenized assets as collateral. So I'll be able to use my house, hopefully as collateral, to mint DAI stablecoins and to do margin trading. I just love where all this is going. Scale is another little project that's helping to scale up Ethereum. It's just saying, like I continue to talk about, it's the ecosystem, the network effects that just makes Ethereum so strong. That's really apparent at the moment. 120,000 Ethereum wallets are already ready to stake their ETH when Ethereum 2 comes along. And again, I'll let you know everything you have to do once that's ready to go, but nothing to do just yet. You might have seen in the news, we've had a few of these huge transaction fees. So people spending millions of dollars on a fee rather than transactions. And it appears there's a bit of blackmailing going on here. Whether or not hackers have used this to exploit the exchanges, but I think we're going to hear the details of this in the coming days as we learn more. But that's not a mistake that someone's actually sent a huge fee. I think there's something definitely more to it going on here. Now, Kyber's had another fantastic week. Sentiment were again over these changes in the data. So I think it was up 82% in the week. But Kyber, since we first covered it, I think it's nearly up 700 or 800% since we covered it in our reports, and I posted that I was buying it and adding it for you guys. I think that was at 12 cents or 15 cents, and it hit $1.40. So, it's nuts that this is possible. Putting $1,000, and if you like a coin, for example, and that's now worth $8, $9, $10,000. It's just incredible, and we haven't really had an alt season yet. That is what's really scary. So these big coins are being added to FTX to trade as spot tokens or as the indexes as well. Where I think this is heading, and this is just speculation on my part, I think that we might see FTX add some more DeFi projects, but I want to see a DeFi bundle, a DeFi index get added for trading there. That would just be fantastic. Raiden, which we've been super bullish on, I think at one point that one was also up 100% in the last week or two since I did the write-up for members. This is one where it's continued to have good network activity, and it really doesn't match price. So price is dead, but the network activity has been busy, and people miss that. We pick up these trends, we let you guys know, and this is where we are having these fantastic winners. And Raiden's now looking to take the next step and add more privacy to their second layer, Ethereum-based Lightning network, you can think of that as. Loopring is another one. It's had a great run. They have launched these PayPal for Ethereum. So this is now on Ethereum. You can use this right now. Loopring Pay, instant free transactions. This is one, again, that we covered back in December and then in January in our research report. So back then it was trading for around 2 cents and it's jumped up to around 11 cents, sitting around 8 cents at the moment. So that was another big win for us. 400% or so from doing our research, and congrats to the Loopring team. It's awesome that we now have instant and free payments on Ethereum. This is a great summary we saw from Matter Labs about all the different scaling technologies, basically 6 different types at the moment, some of them on layer 1, some of them on layer 2, the pros and cons of each, but basically they're all live now. So Ethereum has pretty much scaled. It's just a matter of projects integrating this now. We're seeing that corporate integration. So another French bank, Societe Generale, is very active using its Ethereum address in these transactions. I mean, amazing to see. Curve Finance, DeFi now giving you 5% on your Bitcoin. So thanks to Ren and these other projects, you can now earn interest on tokenized Bitcoin as well. Microsoft and Google spreadsheets are using the Ethereum mainnet. How cool is that? Thanks to the baseline integration. And we've also got Microsoft building that ID tool, COVID-19 passports. Now that is a little bit scary for those of you that like your privacy, but that is using the Bitcoin blockchain for their new ID tool. All right, so a couple of other articles to get through and we're done. Mark Capella's revealing his ownership of some different Bitcoin addresses. Funnily enough, Craig Wright came out and said that apparently he owns addresses that were the Mt. Gox hackers. So I'm not sure whether or not he put himself in hot water or he's just lying again, but never a dull moment with Craig there. And the Human Rights Foundation actually funding some Bitcoin privacy tools, particularly these coin mixers. So obviously this is going to rub a lot of people up the wrong way. But yes, privacy is definitely coming. It's already there on Ethereum. It's already there on Bitcoin, but it's just going to continue to get better and better. Now, the last few articles here are all about custody and storage. So Wilshire Phoenix, who are a massive company, they've filed with the SEC for a publicly traded Bitcoin fund. They've said that they want to be different to Grayscale. Investors deserve more. Now, investors are paying huge premiums. We've heard these stories that there's no way out of that Grayscale trust, and you do have to be locked up for a set period of time. It's 6 months for some funds, 12 months for others. But what I don't like here is that retail investors, particularly for the Ethereum trust, they were paying 1,000% premium at one point, and they shouldn't really even be allowed to work that way, I don't believe. Three Arrows Capital now hold more than 6% of Grayscale's $3.6 billion Bitcoin trust. So it just shows you how small that Bitcoin market cap is when one company or fund or trust or firm can come in and swoop up such a huge percentage. We've got Mike Novogratz's fund, Galaxy Digital, teaming up with Bakkt. They actually want to help asset managers buy real Bitcoin. That is what we want. I was so disappointed when Bakkt announced that they were switching and focusing to those cash-settled products. A German stock exchange was listing a Bitcoin-backed exchange-traded product. So again, I love this. Every time there's an investment, there's a Bitcoin bought. That's what we want to see. And sadly, this is why we need a lot of these custody products, because even someone who's a podcast host who'd been dollar cost averaging for 7 years, they had 100 grand and they lost it because they plugged in those 12 words to a Bitcoin wallet or an extension that they'd got from the Chrome, the Google Play Store. They thought it was the real deal. And just like that, you've lost 7 years of life savings. So that it just sucks. I'm so sorry to hear that. I hope that doesn't happen to any of you guys. Do not ever put in your private key or your backup phrase to anywhere apart from your own wallet. Okay, so let's get into technical analysis. I'm focused on this weekly chart, whether or not you want to have it on the log or just the ordinary here. We're looking to break this downtrend. That is the big point we want to flip. Get over 10,500. When I was being cautious this entire leg up, the one thing that I had in the back of my mind was, how is this going to behave if stocks roll over? Now, stocks did have that nasty day. Bitcoin wasn't too bad, all things considered. So now we're really just waiting to see if that was just that initial shake-off or the correlation is going to continue. Now, if we get all this money printing, trillions more, I think that works in Bitcoin's favor. I think stocks can go up. I think gold is really sort of showing us here. Gold hasn't given back much at all. It's right near these highs. That's what I'm watching, guys. I will do more detailed write-ups for you every morning for our members. If you want to head over and join us, nuggetsnews.com.au, all those reports I mentioned are in this unit section. We've got new welcome videos on how to use the group and get the most value out of it. That's all pinned at the top of the page if you're a new member, guys. Welcome to the 300 or 400 of you that are new in the last few weeks. I hope you guys have enjoyed that video. Smash the like button, subscribe if you haven't already, share these around, and I'll talk to you again soon. Cheers.